Hi, I'm Jonathan,
Hi, I'm Adam.
and we're going to be running through why remuneration planning is key for businesses to get the most value from their accountant. So, what do we actually mean by remuneration planning?
So when we talk about remuneration planning, we're talking more about what you take out of the company, and that's not just salary and dividends. It's more about the entire package. So it could be contributing to your pension, your company car, and other things that you're going to get a benefit from the company for.
Yeah, and it's mainly getting the company to work for you, isn't it? Like the REM planning is purely to be like, obviously you're running this business, you have a certain level of control over it. Obviously, you still have to make sure the business can afford it, but it's all about like that blend of money of what can the business pay that you'd not pay for yourself, and hence say the personal tax, and also what you have to pay personally because it wouldn't be cost effective to put it through the business.
Exactly. And what's more beneficial as an overall package rather than just pushing it all into one and putting all your eggs in that one basket.
Yeah. And also how you can blend that, obviously, again, owner managed businesses, there's ability to bring partners, family members and stuff in, so it's also leveraging the flexibility you've got there, but also that comes with inherent risks of giving all people control of your business, basically.
So why should business owners be thinking about how they pay themselves and not just how much?
I think the key thing here is in how we work with businesses, and I know you'll be the same. We kind of go to them like, how much do you need to live? And kind of like on what's involved in that living expense, and then we start there and work backwards, because obviously we could know, every accountant in the world will probably say basic salary, then do dividends, but depending on your business circumstances, sometimes the dividends aren't payable because you don't have the reserves for it, or you're actually growing for a different situation, so you need to keep the reserves in the business. You're trying to sell, or there's lots of reasons why. So it's not just a one size fits all sort of thing. It's more, what is the business affording and how can it afford it, and also how does that play into your real life, but then also what you're paying for. So there's always easy wins like company phones. If you're paying for your own mobile, why? You might as well have the company pay for it, because there's no cost of that, there's no benefit, it's not a benefiting kind of phone. So that saves you the, 80, 90, 100 quid for a phone bill, but you've had to suffer tax on that at 20% before you've even paid your phone bill, whereas that can go straight through the business and it saves corporation tax. So it's not just how much you need, but it's what you need it for.
Yeah.
And I think that's where we go with businesses, because obviously there's also tax traps depending on how much you need and where you can go through.
And that we're noticing where like the associated companies coming into place in different varying rates of corporation tax, like you probably end up saving on higher salaries more putting it through a salary rather than salary dividends.
Yeah, depending on what level you're at, there's a certain threshold of where you save more money by doing a salary, which is kind of going backwards from what it's recently been in recent years, isn't it?
And it's a forever changing landscape, isn't it? With HMRC bringing in like new tax rules or different thresholds and everything like that. So.
Well, with every budget, things change, and that's why we do review it regularly, like business owners should do, and we do push our clients to review it. Like every year, we sit down and go, what is the plan? What is the lifestyle? Because people's lives change as well, not just the business landscape and the tax change. People have families, the kids get older, the moving house, there's all them to play with, and obviously what you do at the remuneration planning stage can make sure that, it's silly things like making sure that your self-assessment has enough on it to get the mortgage you want, to get the value of mortgage you want, to get the interest rate you want. All these come into play. It's not just how do you get the money out of the business and pay as little tax as you can. It's sometimes a balancing act of what you need compared to what you want in that situation.
And like you're talking about going for mortgages, that might be 3 years in advance of going for that mortgage. So you need to start thinking about it as soon as possible rather than the day you want to start applying.
Yeah. And the beauty of what we do is because you've got the REM planning in place, it means it's easy to flex. So once you've done the hard work, every year all you're doing is reviewing what you've got, dealing with the changes to the tax system or whatever the budget brings out, and then after that you're just kind of running like normal. So that helps you to save and plan and look to the future. You're always looking like 12 months ahead, aren't you? So it's important that you've got the plan that you can then flex instead of having no plan whatsoever.
Yeah. So what makes remuneration planning a key part of running a financially healthy business?
I think the biggest thing, and it's always the same, is cash is key. Cash is key, sorry, I should say. And that is going to be key no matter what you do in a business. So by having a set amount that you're taking, that means that you can budget that into your business cash flow and make sure you can afford to pay you at the very least. A lot of people set up businesses for varying reasons, but ultimately it's to have that financial independence. And if your business if you're taking lumpy amounts and 200 quid there, 500 quid there, you'll never know really what you're earning. You're purely just dipping in and out. So keeping your financial situations very separate is key. Having separate businesses and being very, very strict with yourself on that monthly amount. But then it also plays into a part, I think, into your own personal cash flow.
Yeah,
you know,
I was just about to mention that.
you've got self-assessments, haven't you,
Yeah.
and payments on account.
It's not just about a financially healthy business, it's them looming 31st of January tax
Yeah.
return payments, and you definitely don't want to be looking at those that midnight.
Yeah, and obviously, if you have to. So most directors are on self-assessment, so it means you pay the 31st of January and you pay the 31st of July. And they're your payments on account. Obviously, one part of that is getting your self-assessment done sooner. And obviously, by doing Rem plan, you can get it done sooner because as long as you've stuck to the plan or notified whenever you've strayed from the plan, you'll know what your tax bill's going to be. So those payments become really simple and really easy to plan for.
Yeah.
You know, you've got 12 months between each one, really, you can plan. So you know how much you need to save a month out of your drawings, put it away, and you can create a savings account and put it that way. And obviously, if you keep it consistent, those numbers don't flex.
Yeah.
So the worst thing is if you keep increasing your earnings, those payment on accounts in January and July just get bigger and bigger until you get to a level out situation. So, and because it's not last minute, you're then not having to lend from the business to pay your self-assessment bill. Because that's what a lot of business owners do. They get to the 31st of Jan, they can't afford the bill. So then they just take the money out of the business, and then there's dividend and tax implications, or tax implications regardless of that going through to your director's loan account being drawn out. So you just end up paying, robbing Peter to pay Paul.
Yeah.
And it becomes a bit of a cycle.
And end up pushing yourself into higher tax brackets by
Yeah.
doing that as well. So it's one of the other things is that you mentioned it's 12 months in advance. So obviously there's a lot of ISAs out there that are 12-month terms. So you can start putting it into there and earn a bit of interest on it.
Yeah.
So effectively it's not costing you as much.
Yeah, and it just means you can be less stressed, I think, which I think as many business owners will be, is the less stress as possible is definitely the key thing in life. Why is it important to understand the different options available, even if you're not changing anything right now? Because obviously, depending on where you are in your life, you might be like, well, I'd love to do X, Y, and Z, but I can't afford it. But it's good to know. Why is it important to know that in advance?
It's just being proactive. So there's plenty of different schemes out there that'll help you save tax or take more out of your company or get more personal benefit. So yeah, being more proactive, having the options there, whether it's a car, whether it's your pension contributions, whether it's different investment schemes. There's you don't want to find out about that on the day or like after the fact when you've already taken money out, or you could have done something more efficiently.
I think it also helps with that. Obviously, all about this is having a plan. But then, if obviously things change and there's suddenly a big influx in money, and you're like, well, I want to take a lump of 20 or 10 or 15 or 100 grand out of the business. So understanding right there, and then you're like, well, I want to take this out, but I'm investing it. So what's that scheme you mentioned, or can you put me in touch with that person? So it's making sure that you're aware of it, in case any of your plans change for the better, really, isn't it? What are some of the key reasons business owners come to you for remuneration planning?
It's all about getting the most out of your business, really, and that's why anybody ever sets up a business. They want to be looking after themselves, but obviously growing that company. And like we were saying, with the scheduled payments and knowing what you're going to pay and not having to take that additional money out, you're not hindering the company. You're scheduling everything in yourself. You know that you're getting the best package and the most efficient package and the most for your money out of the company if you're planning it and talking about all the different options. And then obviously like it's looking at like bringing family members in and stuff like that and the wider picture. So I think that's the bare bones of it, really. It's just getting the most out of the company the best way possible. Yeah,
and I think obviously, like you said, people set up the business for that financial independence, as well as the flexibility, as well as the growth and everything else that comes with it. But there's also that side of you live within your means, most people. So, and a lot of people and a lot of businesses we work with, obviously, you have to pay tax. We all know you have to pay tax, and obviously what we do is we work out how you can pay the tax that you have to pay, the actual tax you owe. Nothing, you're not paying unnecessary tax where you don't need to be. But people do want to pay the tax. People understand that there is a tax bill to pay. But knowing that in advance, I think that's obviously, when we're talking about this, people also come to us because they want to have that more control and confidence in their finances. But you can't have the confidence and the control unless you have that plan, unless you know what you're working towards, and you kind of have a base plan that you can flex. You know, none of this is rigid of you can't change once you've set it up. It's 12 months between self-assessment periods. So you could get 6 months in and change it, but at least you have a basis of what that change is. And have that control. The control's there. Obviously, we have clients that are phoning us up and saying, look, I know I'm on this REM plan, but what's the impact if I take 10 grand? But it's because we've got the plan and we know what they're going to be if they stick to the plan normally. You can say, well, that 10 grand is going to put you into the the higher rate bracket.
Yeah.
So, you know, you need to knock off the 33 and a bit percent off that. So if you take 10, put 33% of it in the savings account. Or if you need 10, because that's what you're going to be, you can buy something that's 10, you take out 15 or whatever and put the rest into savings for the tax man.
Exactly.
It just means you can plan, and that gives you the control and confidence just by default. And then from that you can grow on it and get a bit more, I don't know, adventurous with what you're doing with your tax planning and your personal planning. But the aim is initially just keep it simple. Keep it in control.
Sounds silly,
pay the bills.
but if you went to a supermarket or a restaurant or everyday tasks, if you just went and did that and there were no price on the shelf, so no prices in the menu, so you'd feel a bit clueless when you come to pay the bill, wouldn't you? So we kind of bridge that gap and give them a bit more knowledge around it, like day to day or year on year. Or
it's just building that confidence around their own personal finances.
So what can someone expect when they book a remuneration planning in with your team, and why is it a good time for business owners to take a fresh look at this now?
So I think all our remuneration planning, it's 45 minutes. We'll sit down in a room. Obviously, there's a bit of work beforehand, and obviously our team do a bit of work in advance. So what we do is we go through. We want you to come in with all your income. Obviously, as an accountant, we look after a lot of businesses, and we look after lots of aspects of their numerous businesses and numerous parts of their lives. But there are some elements that we won't be involved in, you know, like investments. If you've got a financial advisor that you use, we need the investments, we need their interest, we need to know what the income is, if they're deriving income from there.
Rental properties?
Rental properties. Some we work for, some we don't, depends on their setup. So it's mainly coming together with just come with everything, you know. Don't be worried about giving us too much, because we can always pick out the bits we need. Like even if you bring your ISAs and stuff like that, obviously an ISA is not involved in this at all, because it's in that tax wrapper of an ISA. But if you bring it, it's better than not bringing anything, sort of thing. And what we do on our side is we have obviously all this information in advance. We have access to the business finances and stuff like that, and then we go through like what, and then it's more of a conversation. Like the more that the clients are honest with us and open with us with their general plans, we can then add more advice, can't we? If they're saying, look, I'm taking £6,000 a month out of the business, but I'm actually investing 4 of it, they'd be like, well, what are you investing that 4 in? Because there could be ways of us to change this up so it never has to be a personal tax implication to then be reclaimed off the other side. It could just go straight for his business. So it's mainly the clients come with as much information as possible. We fill in the gap, and at the end of it we pull together a plan. So there'll be a monthly take-ins, what the tax bill will be if we stick to that. So you have a set plan of, if I stick to this for the next 12 months, this is my tax bill, this is the implications. And we can even work out where you are now and work out how the payments on account are going to change, because there's a lot of business owners come to us that are paid really high payments on account in January and July. But the plan we've done is going to reduce that down significantly, so we can actually apply for reductions in the payment account, which means you save cash earlier. So it's that forward planning actually saves your money.
HMRC, is it? It's in your pocket or your bank account earning interest instead. Yeah,
and obviously it's easy to get. It's easy to pay money to HMRC. It's harder to get money out of HMRC. So you've got to make sure that you're definitely only paying what you need to. And then obviously from a timing point of view, obviously we do this remuneration planning towards the end of the year, so November, December time, but mainly January, February time, because obviously the tax year for personal, it runs from April to March. Obviously it does run from the 6th of April to the 5th of April, but for easy money we always do April to March, that's the plan sort of thing. So we always want to be having these conversations like December, January time, we can run through all the details. It's a good time to kind of take stock. Obviously Christmas is a bit of a slowdown for everyone. January is kind of everyone takes it as a new start sort of thing. So we have those conversations, we make a plan, and then you guys can just hit the rest of the year. But we're not having to worry about it. And really, business owners can focus on what they do best. Generating wealth for their business. Servicing their clients and their customers, knowing that the back office stuff sorted with us in the early in the year, really, isn't it? And obviously, this is also then feeds into one of our other services, which is the pre-year-end tax planning, which is basically a similar sort of process, but for the business. Talking about the business's financial health, what it can do to save its corporation tax, and obviously that always feeds into this planning. We do it.
Bring it forward instead,
We pull that into the REM planning, don't we? Because we go, well, what can the business afford? What's the business tax bills? What's the cash flow left after that? And then that plays into what the business can take out. So it's one of these services that we do in line with other services we offer to kind of give a more rounded approach to the business and personal relationship. So what's the main message for business owners to take away from this conversation?
Just be more aware and more focused around your own personal situation and planning things in and scheduling those payments, not getting caught like short in the last like January or December, like trying to squirrel money away and suffering around those times.
Yeah.
Just plan a little bit better for it, or know what's out there
Yeah.
and what the offerings are.
Yeah, and the key thing is that obviously business owners know their business. They know the seasonality of it. Obviously, we can advise, we can see it. We do lots of reports, and we work with lots of industries. So we do have clients in the same industry that we can kind of get experience on stuff like that. But clients know their own cash flow. So obviously, when we're talking about this planning, if they know that they've always got a wealth of cash in September, because that's the seasonal business, then it's that time that you can start putting the money away. But you know that's coming. You can plan for that. So it is. It's almost taking the control, and obviously we're here to help give them that control and give them a bit of structure to work to. But I think one of the key things as well is we need to treat the business and the person very separately.
Exactly, yeah.
Because you've got different needs and different taxes and different situations. So by keeping yourselves separated, it means that can be a much easier conversation, and you'd have way more control over what's happening.
Definitely.
And then, how can people find out more and book a remuneration review?
Just by reaching out to us. So whenever we email you or we have this quarterly catch-ups and just say like, oh, I've heard about this service that you offer, just bring it up in those catch-ups, and then we'll just get that scheduled in and go for it.
Yeah, certainly. Obviously, we offer it to all our current clients, and with most are on it, and obviously it's a good service. But then, generally, from an outside point of view, we've got forms on the website. We can phone in. We've got email. So if anyone's got is more interested in that and a wider service, obviously we can reach out to all businesses, and we can go from there. Cool.
Done.
Thanks for watching.
Cheers.
Thanks for watching.